Hi guys, welcome back. My name's Aaron. This is Czar Finance, episode 36, Technical Analysis. Okay, so when it comes to technical analysis, I'm going to break it down for you in really simple terms. You're watching price and volume based on previous days' trades of what a stock price has done, and you're making judgments about the future on how well you can predict whether the stock is going to go up or go down. Okay, that's basically what technical analysis is in a nutshell. But really, technical analysis is looking at the statistical analysis of history of what price action has done and price volume has done to predict the future. And that's pretty much what I said before. So you're looking at price action of the days before and the days present to compare about what it can do in the future. Now there's three sections that come when it comes to technical analysis, and to discount the market of market rumors, if you will. So if a company says, oh, we're going to do this or we're going to do that, don't get caught up in the hubbub of what the hot topic is right now. You're looking at more bigger trends. Has there been an earthquake in a certain area? Has there been a hurricane maybe in Florida? Has there been a bombing somewhere that has been disrupting the markets? Has there been a recent election that might have caused something to go north? Has the president stepped down of a company, or has there been a new discovery in something that this company has done that's unbelievably crazy, which could cause the price to go up or go down? So those are the big trends you're going to look for in the market. You're not going to pay attention to the little and small things. They might be important here and there, but you're looking at the big picture. Is this one event, or is this larger events going to drag down a certain sector or a certain area based on where their location is? So for example, I don't know, say you're in California and you have a technical company there, and you're the very big, say, I don't know, God forbid, say Apple or something like that, or another company, and an earthquake strikes and it just crushes everything and everything goes into the into the ocean. Kaboom! There we go. Well, that's obviously going to affect the market value of that company's stock. The stock company might plummet and things might go haywire because a huge event has happened to that area of the country, which is affecting the company, which is affecting global distribution for all their products, blah, blah, blah. Okay, so those are big, large case scenarios. So we're looking at past trends and things of that nature. The next thing is to look at movements in trends. When I talk about trends in technical analysis, we're talking about, can you see a recognizable pattern? It's a visual aid. We're not talking about the not technical analysis, but the fundamental analysis, where you look at the stats and the data and all that sort of stuff. We're looking at the technical part of it visually. Can you see a trend going on? I'm a visual person. I tend to really enjoy watching technical analysis and learning more about it. And when I talk about trends, here's an example of a trend. I quickly drew here. Right here, if you had a stock that was going up, 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 up like this, this is what's called an uptrend right here. I don't know if you guys can see that here. This is called an uptrend. Now, the same is true going down. When a stock goes up like this and then goes back down and goes down, this is called a downtrend. Okay, right here, downtrend. Okay, you can see these. It's like almost starts to form like a certain pattern. It's visually, you can recognize these patterns right here. Okay, up and down trends. So that's one other consideration to. Basically, that's how technical analysis work. You're looking at trends, you're trying to spot the differences and predict the future of what's going to happen with price action and volume, for the next day, so that when you place a bet or place a trade, that you can make some money on that price volume or the stock price going up and capitalizing on that when you decide to sell it. Buy low, sell high type of a thing, or buy high, sell low. You can make money in both aspects by doing short sales, which we'll get into later. But typically you buy low and want to sell high and make some profits off the top and collect your winnings and then reinvest again and keep doing the same thing, rinse and repeat, rinse and repeat, rinse and repeat till you make $1 bazillion and you can retire and give and save and all that sort of stuff. The last trend here is looking at history. History tends to repeat itself. So what does that mean? So every year, for example, Apple loves to release new iPhones, and a new release, new products, new this, new this, new that. Well, every trend, there tends to be a new demand for it. A lot of people tend to go say, hey, I want the new, latest, greatest product. Let's go invest some more money. The stock prices go up. Then while it's out, the kind of prices kind of dwindle down. Then again, another year goes by. Another iPhone comes out with other gadgets and features. Well, let's reinvest again. And then the price goes back up again because people are reinvesting in a product that is coming out and enhancements with, people like to reinvest in a company that's constantly pushing out new and innovative products. That's why Apple is very successful, and they're products that last long, they're reliable, and they have a great attention for detail and all these things, and they have a great market following because of these things, because they give back to the community by making products for them. So it goes hand in hand. So that's how basically history tends to repeat itself. When you see a company, when they release a product, it opens up, or say, for example, it doesn't even have to be a company release or anything like that. When a hurricane strikes, Florida or something like that, or hits the southern part of the United States, for example, well, if the fruits or Florida orange juice, for example, gets, their crops get destroyed by that hurricane, or there's a lot of frost or something like that, well, it's going to hurt that market area for Florida orange juice, and the price is probably going to suffer because they're not going to be producing as much orange juice out there for people and consumers to buy, which is going to cause their stock prices to go down and the prices of inflation to go up because they're trying to capitalize on the opposite of that, okay? Excuse me. So take a look at the history. You're looking at the trends in the past. Has there something going on when the stock market went down? Was there an event that happened? Was there some kind of special thing that went down? Was there a bomb? Was there an earthquake? Was there a tsunami? Was there a hurricane? A volcano? I don't know. Aliens landing down on the planet that caused that stock price to go down? Or maybe something did happen that was positive. Maybe there was lots of rain this year and a crop, and something went really well with oranges, and then now all of a sudden there's a bountiful, plentiful oranges, and now that's causing the production to be done and orange juice to be made, and everybody has orange juice around the world, and distribution is great, and oh, go orange juice, So these are things to consider about history. What caused it to go down during that time, and what caused it to go up? And has it repeated, or has it happened in the past before? All right. So the last thing to talk about is highs and lows, higher highs and lower lows, and how to recognize them when it comes to technical analysis. Really straightforward, down and dirty version. Here we go. This here is an example of a stock going in which direction? Looks like to me it's going in the uptrend direction, okay? So a higher high means when the stock opened, when it was low here, it opened up, closed, went down, and then it kind of opened up the next day and went high again. This high has beaten this high, so this is the higher high of these two stocks between 1 and 3, higher high. Now the same is true on the opposite side of the spectrum when the stock maybe moves down. You have, opens low, went up, and then came back down. A lower low, okay? Again, this is an example of a lower low. So for example, 3, it opened up and then came back down, it went down in stock market value, so now this is the lower low. Now what you're looking for, generally speaking, is for the reversal of this to bounce back, to go back to this type, to go back up. So how do you know? Well, one of the things is typically when you have a lower low, and if it crosses what's called the trend line right here, the median of this line, if it crosses that, typically you start to see a reversal pattern. It could go back up and then back down, but there's different signs, and there's lots of different categories and warning signs to look out for that, and chart patterns to start to see that has happened in the past that will tell you which direction is going to go, or give you a prediction, I should say, as to whether it's going to go up or down. The market, you can never really tell whether it's going to go up or down. It can do whatever you want. It can go sideways, it can go up, it can go down, could do, go all sorts of different ways. So it's just a general tool for technical analysis to analyze patterns and put those patterns in place to give you the best prediction of what the stock is going to do, whether it's going to go up or it's going to go down, and also to recognize about volume. I didn't talk about it too much, but volume basically is how much money has been dumped into that stock to buy and sell and do trades within that stock. So if a lot of people put a lot of money in it, the volume of the price goes up, which causes a lot of the stock price to go up, and or vice versa. When people are withdrawing a lot of money, they're demanding money from the company, the volume will go up, but the price value will go down, causing it to go in an opposite direction. So that's a quick nutshell of what technical analysis is. My name's Aaron. This is Czar Finance. And oh, before I leave, I want to tell you a top secret tip here. And I don't want to say top secret, but a great recommendation for you guys here. Grok Trade and TradersFly.com are fantastic websites to go check out. Des Woodruff is a fantastic guy who does free online trading education.com, as well as Grok Trade or Grok.com. Either one of those websites, you can just Google him. Des Woodruff is his name. He talks about technical analysis on a daily basis, and he blogs about it on his YouTube channel daily. So I highly recommend you take the 4 minutes of your day and just watch his videos. Even if you don't know nothing about technical analysis, he will guide you in the right direction and explain to you what are the best procedures for viewing patterns of the past to help predict your future and making bets. He has a great way. Same thing with Sasna Egnikov. He also has on tradersfly.com a great YouTube channel. He has DVDs and all sorts of different ideas and tutorials and videos that he shows you how to recognize patterns and help predict, with confidence which way the market is going to move, and so that way you can profit off of money. Great guy, super nice. You can email him, either one, Des or Sashna, and they're both fantastic. So shout out to you both out there. I really like your stuff, and that's how I'm following those guys, because if I want to better myself, and they're in the daily trades, they do day trades every single day, and I just do weekly or monthly trades, and I've been seeing great results by following their strategies. It only benefits me to help explain it to other people to learn about this sort of thing, and so that way when everybody profits, we all win together. So check out those two sites. Those are great sites to check out. Oh, and one more site to check out is what's it called? TradingView.com. Again, TradingView.com, TradingView.com. And the reason I say that is because on that site you can type in a stock symbol, and you can look at the patterns or the candle charts, and you can make lines and charts and graphs and all sorts of arrows and stuff like that to help guide you or recognize those patterns, and just play around with it for free. It doesn't cost you a dime, and you can start to predict what goes on and make notes on there and all sorts of stuff. It's live, it's free, it's fantastic. If you want to pay the premium price for the year, you can, to get extra, live, up to date, ticker symbols and price action. Up to the second or millisecond, that's fine. But again, great resource. So check those sites out, and I wish you the best of luck, and we're going to dive into this a little bit more. Thanks for joining me. My name's Aaron. This is Czar Finance, episode 36, Technical Analysis. Bye-bye.